Welcome to the deep dive. If you've ever, had to send money internationally, maybe to family or paying someone you work with overseas, you probably know that feeling. You hit send, and then you start wondering, okay, how much of this is actually going to arrive? How much gets lost in fees, weird exchange rates, all that stuff. So today, we're aiming to get rid of that feeling. Our mission is basically to cut through all the noise banks, apps, even crypto didation, and find you the absolute cheapest and fastest way to send your money. And we're using the latest data we have from the first quarter of 2025.
And that data, well, it really lays bare a frustrating truth, doesn't it? Most people are losing quite a bit of money just by picking the wrong way to send it. Just to set the scene, the global average cost. For sending, say, a typical $200 transfer, it's still sitting at 6.49%, which is pretty high. But here's the really key thing you need to grasp. While okay, the average bank fee might be around 4.6%. The worst offenders, the banks are way, way higher on average. And then you've got the specialist services, the good ones, down around 0.59%. That's a massive difference in your pocket.
Right. Let's unpack that first bit. The traditional banks, they're still an option, obviously, but you're saying they're just dramatically more expensive. We got this figure here from Q1 2025, banks being a single costliest way to send money. An average cost of, 14.55% just to send $200? That seems incredibly high. Is that just banks being banks, or is there structural reason behind it?
Well, it's probably a mix, but yeah, the structure is a huge part of it. They are, hands down, the costliest provider type. And that 14.55% average, it means for every $100 you try to send, almost $15 just vanishes, gone. Now, compare that to the best non-bank options. They're often managing 5%, sometimes even less. Big difference.
And the reason, the underlying cause, seems to be this old system they use, SWIFT.
Exactly. SWIFT isn't really a money transfer system. It's more like a messaging system between banks. So the money often has to hop between several different banks, these correspondent banks, before it gets there. And each hop can add a fee, sometimes unpredictable fees, which, guess what, you end up paying. That's how you get hit with those dreaded correspondent bank charges. Sometimes they can be $100, maybe even more, on just one transfer. Wipes out the value completely if you're sending a smaller amount.
Okay, so if you're listening, you need to watch out for two main ways they get you with this old system. First, the obvious one, fixed transfer fees.
Yeah, and those can be all over the place. You might see like $3 from a decent online service, but then a traditional bank wire could easily be $50, $75, even $100. But the second cost, this one's sneakier, it's the exchange rate margin, or, the markup. This is where they often make a lot of hidden profit.
So they give you a worse exchange rate than the real market rate and pocket the difference, kind of like a hidden fee on top of the stated fee.
Precisely. There's the mid-market rate. That's the live rate banks and big traders use amongst themselves. Then there's the service exchange rate they offer you. And that gap between the two, that's pure profit margin for them. Traditional banks are notorious for this. And interestingly, PayPal often gets called out here too. They're frequently listed among the most expensive overall, actually. You combine their fees and their poor exchange rates, you could be looking at 7, maybe even 10% total cost.
Wow. Okay, so that's a problem. Let's pivot to the solutions. These specialist money transfer operators, the MTOs, they popped up specifically to beat this SWIFT headache, right? This is where things get better, more transparency, faster speeds, lower costs. So who are the key players we should know about? And importantly, how are they cheaper?
Yeah, this is where it gets interesting for the consumer. Their edge comes down to smarter tech and just focusing only on transfers. We've looked at, millions of transfer comparisons, and the best providers tend to excel in specific areas. Okay, so for straightforward bank account to bank account transfers, Wise, formerly TransferWise, often comes out cheapest. Their fees usually land somewhere between, say, 0.25% and maybe 1.75%. Very transparent. And the reason they're cheap is key. They often avoid SWIFT altogether. They have this clever network of local bank accounts in different countries. So your money might go into their US account and then they pay out from their UK account. The money doesn't actually cross borders in the traditional expensive way. It makes them really good for transfers up to around $10,000 or equivalent, and usually settles pretty fast, like one business day.
Okay, that makes sense for bank accounts. But what if the person you're sending to doesn't have one, or they just need physical cash, like right now?
Good question. That's where a service like Remitly often leads. They frequently come out as the fastest and cheapest option specifically for cash pickup. The data shows they were the cheapest in that scenario about 42% of the time, which is pretty dominant. They're also often highlighted as, on average, the best bet for sending money to places like Africa and Latin America, especially if you're sending from the US, the UK, or Europe. popular corridors for them.
Right. Now, even with all these new apps, we can't really ignore the old giants completely. Western Union, founded back in 1851. Are they still relevant?
You know, surprisingly, yes. Their relevance today comes down to one thing mainly: sheer reach. They're in something like 200 countries and have over 500,000 agent locations, 550,000. It's just a massive physical network. But here's the twist. If you use their online platform for a bank transfer or paying with a debit card, their fees can actually be pretty competitive, sometimes matching the newer MTOs.
Ah, so the key is using their website or app, not necessarily walking into an agent location where fees might be higher.
Exactly. The digital side of Western Union is often much cheaper than their traditional over-the-counter service. So definitely compare online.
Got it. And what about the other end of the scale? Businesses or maybe someone buying property abroad, moving really large amounts, 6, 7 figures?
Yeah, for those big transfers, you typically want a specialist focused on large volumes. OFX is a name that comes up a lot there. They usually handle transfers over, say, $50,000. And their upper limits are huge, up to $2 billion, apparently. Their model is different, too. They often charge only an exchange rate margin, no fixed transfer fee. And that margin is usually quite small, maybe 0.4% to 1%, much better for large sums.
Okay. And one more category, what about mobile money? Sending directly to someone's phone wallet, which is huge in some parts of the world.
Right, essential in many regions. World Remit is often cited as a leader for mobile money transfers. They have strong coverage for sending to mobile wallets, particularly across Africa, the Middle East, and Latin America. Very convenient if the recipient primarily uses mobile money.
This is really helpful. It shows it's not just about picking an app, it's about picking the right service for your specific need: bank transfer, cash, large amount mobile money.
Yeah.
But you mentioned something else interesting. The method you use to actually fund the transfer and how the recipient gets it also makes a big difference to the cost.
Yeah.
What does the Q1 2025 data show there?
Yes, this is fascinating and sometimes counterintuitive. So the cheapest way to actually pay for your transfer, to fund it, according to the data, it's using mobile money. That averaged just 3.63% in total cost.
Mobile money to send. Okay.
And then the cheapest way for the recipient to actually receive the money, the disbursement method, it was debit card pickup, averaging 3.44%.
Wow. So not necessarily a direct bank deposit. That's surprising.
It is. Sending money to a general bank account, especially if you use a non-specialist provider, jumps up to an average cost of 8.81%. But here's the real shocker in the data. Sending money to a bank account at the same traditional bank as the sender, that was the single most expensive receiving method they tracked. It averaged an incredible 13.46% in fees.
13.46%. Just to send within the same bank internationally.
Yeah. It seems like that convenience or familiarity comes at a massive premium, definitely something to avoid.
Okay, this naturally leads us to the real disruptor, the one that bypasses the whole banking system, cryptocurrency. How does using crypto for international transfers stack up,
Yeah.
especially on cost and speed?
Well, the big appeal is cutting out all those intermediaries, right? No correspondent banks, fewer regulatory hurdles in the transfer itself. So cost-wise, crypto transfers typically land around 1% to 2% of the amount. That's way cheaper than any traditional bank. And it's definitely competitive with, or even beats, some of the MTOs, depending on the specific transaction. And speed, that's the other huge advantage. We're talking minutes, usually. Near instant settlement compared to, the 5 to 7 days you might wait for a traditional international wire to clear sometimes.
Okay, and how does it actually work? You just need a wallet address.
Essentially, yes. It's purely digital. Sender needs crypto, recipient needs a digital wallet address. You send it directly, peer-to-peer, across the internet. It completely bypasses the old banking rails.
Now, the big question with crypto is often volatility. Bitcoin, Ether, they can swing wildly in price. If you're just trying to send, say, $500, you don't want it to become $450 by the time it arrives minutes later. How do you handle that?
Absolutely crucial point. And the answer is, you generally don't use Bitcoin or Ether for stable value transfer. The best practice here is to use stablecoins, things like USDT, Tether, or USDC, USD coin. These are digital assets specifically designed to be pegged one-to-one with a traditional currency, usually the US dollar.
So using a stablecoin means the value shouldn't really fluctuate during the short transfer time.
Exactly. It minimizes that volatility risk dramatically, making it a much more reliable way to send a specific amount of value across borders quickly and cheaply using crypto rails.
Okay, we've covered providers, methods. What about geography? Does it cost more to send money to certain parts of the world than others? Does the Q1 data show big regional differences?
Oh, absolutely. Location matters a lot, both where you're sending to and where you're sending from. Looking at the averages for sending that $200 benchmark in Q1 2025, the most expensive region to send money to is still Sub-Saharan Africa, SSA. The average total cost there was 8.78%.
Why so high there?
It's often a combination of factors. Less competition between providers in some corridors, sometimes regulatory complexities, maybe less developed financial infrastructure in certain areas can all add to the cost. On the flip side, the least expensive region to send to was South Asia, SA, places like India, Pakistan, Bangladesh. The average cost there was down at 4.80%.
And that's likely due to high volume and intense competition on those routes.
Precisely. Those are some of the biggest remittance corridors in the world, so providers fight hard on price, which benefits the consumer.
You also mentioned sending for matters. So it might be more expensive for someone in country A to send money than someone in country B, even to the same destination.
That's right. The local financial environment and regulations in the sending country play a big role. We see some standout examples in the G20, actually. Sending money from South Africa, for instance, had a really high average cost of 15.23%. And sending from Brazil wasn't cheap either, averaging 9.96%. These often relate to things like local banking rules, exchange controls, and the competitive landscape within those countries.
This has been incredibly insightful, a real deep dive into dismantling those costs. So let's bring it all together. Can we give listeners, say, 4 final, concrete rules of thumb, things they should always do to maximize savings?
Definitely. 4 key takeaways. Rule number 1. Always compare. Don't just use the first provider you think of. And crucially, ask them this specific question. After all charges, including any exchange rate markup, how much money exactly will my recipient get in their currency? Force them to give you the final landing amount.
Okay, compare and ask for the final amount. Got it. Rule 2.
Rule number 2. Avoid credit cards for funding transfers if you can. Your credit card company will almost certainly treat it as a cash advance. That means sky-high fees, instant interest accrual at a horrible rate. Just don't do it. Use a bank transfer, ACH, or debit card if possible.
Right, no credit cards. Rule 3 seems to be about embracing digital.
Yes. Rule number 3, go digital whenever possible. The data is clear. Digital-first services, sending online or via app, averaged a cost of 4.85%. Compare that to non-digital services like walking into a physical location with cash, which averaged 7.16%. Digital is usually cheaper.
Makes sense. And the final rule.
And rule number 4, if practical, send larger amounts less frequently. Because many services have fixed fee components, sending one transfer of $1,000 will almost always cost less in percentage terms than sending 5 transfers of $200. So, if you can consolidate your payments, you'll generally save on the per transfer fees.
Okay, that's super clear. Compare. No credit cards, go digital, send larger sums. The big picture seems to be, ditch your traditional bank for transfers. They're charging an average of 14.55%. Instead, look at these modern specialists, the MTOs, or maybe even stablecoin crypto, where costs can be well below 5%, sometimes even under 1%, plus they're usually much faster.
That's the core message. The options are there to save significant money. But, while things are better, we're not quite where global bodies want us to be. The G20 nations and the UN, through their Sustainable Development Goals, have set a target to get the global average cost of remittances down to just 3% by the year 2030.
And we're currently at 6.49% average globally. Still more than double the target. We got a ways to go.
We do, although it's moving in the right direction, slowly.
Which brings us to a final thought for you, our listener. We heard that the global smart average, that's the average cost paid by the most informed consumers, the ones actively seeking out the cheapest options, is already down to 3.29%. So it is possible to get close to that 3% target today, if you know how. So the provocative question is, what needs to happen for the overall global average, the one stuck up at 6.49%, to finally break through that 5% barrier? What kind of regulatory changes or perhaps wider adoption of new tech, like maybe stablecoin remittances, would it take to really push those super expensive traditional banking methods towards obsolescence in this space? Something to think about. Thank you for joining us for this deep dive.